the numbers still tell the same stories about families that are locked out, not because they can't afford it, but because their credit file possibly is working against them. And even times where it's not working against them, you've got some unscrupulous things going on with lenders who aren't doing the right thing. So there's a lot of compliance pieces in place, and it's really it always shocks me, and I guess it probably shouldn't, but it always shocks me when I hear about this mortgage fraud going on the way that it does, because I just know how at least there's the appearance of scrutiny of the information as far as the data and HMDA and just all these different laws and things that are in place to protect that. And that's just really sad that those things are happening. But one thing that you definitely can do and that you want to do to make sure that you're prepared is you want to pull your TriMerge credit report. You want to pull your credit report. You want to know what's going on your credit, and you don't want to wait until you go to buy something or go to get funding for your business to find out that your credit's not where you need it to be. So, we got a great partner with IdentityIQ, where you can pull your TriMerge credit report. The link will be in the video description. And you can pull your TriMerge credit report. That's all three bureaus for $1. So that is a great value, because normally you'll pay quite a bit of money in order to have all three scores. But it's important that you know what those scores are, because different credit bureaus, different lenders use different credit bureaus in order to qualify you for their loans and for their lines of credit in those products. So you'll have three different scores. Sometimes the scores are very similar. Most of the time they're very similar, but sometimes you'll see a big difference. And the reason why you'll see that is because, for example, in one part of the country, they may use FICO more than Experian. Other parts of the country, they may use Experian more. Other parts may use TransUnion versus Equifax. And so you'll see those regional differences when you're going to apply for credit. So you'll see that with credit cards, where banks are based. A lot of time will influence which credit bureau they're using. And you also see that a lot of times with car loans and things of that nature as well. But it's very important to pull your TriMerge credit report with your actual scores. There's a lot of credit products out there. The banks provide credit products to show you what your score is. You got Credit Karma. You have Equifax and some of the other credit bureaus who allow you to access it directly. But the thing you want to know is those scores that they're giving you are not the same scores that the bank and the lenders are seeing. So when you're looking at those scores, you're definitely not getting the same information. So when you go to get financing, you're not necessarily going to get the same approval that you would get had you known what your score was. So what I mean by that is you'll go on Credit Karma and it might show you at a 700 or 720 or 730 or something like that. And then you'll go to apply for credit and the score that the lender pulled was a 640 or 630. You say, man, how's there such a big discrepancy? Well, they provide these different models, and it's really confusing to the consumer, because we all think that that's our real credit score. So you look at that and you say, hey, okay, I'm a 700 credit score. I heard that that's good. So, okay, cool. I can go buy what I want to buy. And then you get there just to find out that that's not your score. So you want to make sure that you pull this. So again, we have a partnership with IdentityIQ, with Credit IQ, and you're able to go ahead and pull that report. It's $1. You'll be able to pull your TriMerge report, and then you can cancel after that. But if you leave it in place, you'll have identity theft protection, and you also have breach protection. So if your information is stolen in a hack, which we see all the time on the news, you're covered for that. And you're also covered for identity theft protection, which is, as we know, someone goes and gets an account or gets credit in your name. So those are some things that you'll be covered with that. And so the reason why you want to pull that before you go to buy something, so that way you can be prepared. So if you know what your score is and you know how you qualify and how you look on paper, then you'll be better prepared to qualify and get your information processed and get a product that can be beneficial to you. So don't wait until the banks tell you no to know where you stand. Take action first. So pull that, get your credit report, take a look at it, understand what's on it. Don't be afraid. If you know you have challenges on there, it's better to look at it so you can address it, know what's going on. We can develop a plan to go ahead and get that done, so then you can be in a good position to get the funding for your business and your personal finances that you need. And the thing you really got to remember these days, especially, is that credit is not just for mortgages. Good credit saves you money on your business loans. It saves you money on insurance, even on auto financing. A lot of times you can't even get a lease for an apartment complex or something like that if you don't have good credit. So it's important to know what's on your credit because most people have some errors on their credit. So there might be some things that you're aware of that you made a mistake on, but there's tons and tons of times where there's just a mistake on there. So it's important that we address that and know what's going on. So I want to appreciate everybody tuning in. You're joining AC, the Money Guy, on the Wealth Code Unlocked. We're here every Thursday at 6 p.m. Eastern Time on iHeartRadio on ATL Talks. So make sure you tune in. Also streaming on your favorite platform. So if let me know, drop in the comments where you're watching from: Facebook, YouTube, LinkedIn. Let me know where you're watching from. So yeah, just remember, these days credit it affects more than just your financing. It's almost affecting every walk of life, and everything that you do, they're pulling credit. So with all that, I guess it's time for some good news. So let's talk about a business funding success story. So I had a client come to me. They were looking for financing for their business. They were looking for business credit, a business loan product of some type. She had got declined by 2 of her banks. She walked into the bank, she applied, they did not approve her. And I want to tell you guys that, relationships really do still exist, especially in the financial space. So don't feel like that you can do everything yourself. Technically you can, but there's some value in working with the team and going about things in a certain way. So she went to her 2 institutions that she banks with. Both of them declined her. So we started off by pulling her TriMerge credit report through MyScoreIQ. So we did that for the $1. And then once you get your free your full 3 bureau credit report, you'll be able to see everything that the lender sees. So not only do you see the scores, not only you'll see the account history, you'll see the history of the account every single month. So if it's okay, if it's 30 days, if it's a charge off, it's collection, you'll be able to see all those things. So we found a couple of easy to fix issues. So one was a high utilization rate. So I'm sure you probably have heard that when you have your credit cards, you want to make sure that you don't max your cards out. Whenever possible, you want to avoid maxing your cards out. And the reason being is that shows you as a higher credit risk to the bank. The banks are simply put, your credit score is one thing. It's the likelihood and the probability that you will default in the next 90 days as a numerical value. That's it. So the higher that number is, the less likely you are to default. The lower that number is, the more likely you are to default. So when you're using a lot of your credit and you're maxing out your credit, that represents a risk because the bank is wondering what's going on. Why do they need to use all their credit? Let's be a little bit more conservative right now. And so a lower utilization works out better for you. So just a number to keep in mind: if you can keep your credit card utilization below 30%, that will help you to max out your credit scores. So if you have $900 available, do your very best to not put more than $300 on that card. If you do have to put more than that on the card, you want to make sure that you pay that down before the statement cycle, so that it only reports you having that 30% on the card. So we saw high utilization. We also saw a collection that had already been paid off, and we noticed some incorrections or some inaccuracies with her address. So we built a plan. We corrected it, and within 90 days, we were able to get those incorrect items adjusted on her credit report, and she was able to secure $50,000 in business funding that did not require a UCC guarantee, that did not require proof of assets. It did not require any bank statements. It did not require any tax returns. We were able to do that off the strength of her credit and the fact that she was guaranteeing those business products for her business. So that was a big win, a recent win that we had come up. Actually, on the way into the studio today, I actually was talking with a potential client. He has a waste management business, and he's running into some challenges because all the equipment for his business is very expensive, as you can imagine. I think a garbage truck might run about $350,000, somewhere in that neighborhood. So just think Bentley when you see that garbage truck cruising down the street. Sometimes a little bit more, depending on what they are. But he's building a great business, and he's making a name for himself. But as you can imagine, a $300,000 piece of equipment to buy one truck, that can make things a little bit tight. And not to mention, when you're talking about the maintenance on those type of vehicles, he was sharing with me they had a repair come up that was just north of $20,000 for just a repair on the front arm lift of the front of the trash truck. But the thing is that we are experts at Carr Consulting at helping small businesses get funding, managing risk, and also putting automations in place. So there's three different ways, kind of three different things that we're looking at when we're looking at credit products. Of course, we have all the traditional products, your SBA products, all of those things that are available through your bank and Main Street. But we also have a lot of products that you're not going to find at your local bank and that you wouldn't just readily be able to access. And so some of those are revenue-based fundings where we're able to use fund the business based on the monthly deposits that are showing in their checking account, averaging those for the last few months, last 5-6 months, between 4 and 6. Accounts receivable finance. That's one of the things that I actually spoke to the gentleman who has the garbage company, who has the waste management company. And that was one of the things that we talked about, because business owners sometimes feel like they may not be able to qualify because their credit is not perfect. And everybody who's been in business knows at some point we've leveraged our personal credit and it's suffered so that we could build the business and so we could move that forward. So when you're looking at different ways to get funding, accounts receivable financing, factoring, those type of situations come into play when you have a business that is your client. So when you're a business doing business with another business, you're able to, that money that they owe you is actually something that's valuable and you could sell on the secondary market and in order to generate cash flow for yourself. Now, one of the beautiful things about that product is the lenders are not too concerned with your personal credit. They don't want to see anything crazy or outlandish on there. However, they're not really concerned about your credit because they're underwriting the company or institution that owes your company the money. So, for example, if you had a contract with a university to provide maintenance and that contract is worth $2 million over the next 3 years, or $2 million over the next 3 years, if you did an accounts receivable finance situation and you sold that on the secondary market, the investor that you sold it to will wait to receive that money in full based on that contract. And then what you would be able to do is you'll be able to receive the cash or a large percentage of that cash now. So then you're able to fund your business and move forward. Again, that's great for companies that are growing, because putting your own cash in when you're bringing on new clients, especially if you're a business to business organization, that could be very, very expensive. And that can help you move forward and unlock that growth. And that's something that's available even if your personal credit is not the greatest. And then, of course, we have some opportunities that are based solely on the business owner, their personal credit. So the primary credit of that main business owner. And so that's some of the options that we have. But the beautiful thing when you come to us is we're not limited to one particular bank, one particular institution, one particular insurance company. We're in a position where we're able to broker. So we're able to go find the best opportunity for our clients, for our customers. So it doesn't matter where that opportunity is, we're able to bring that home for you. And this win is it's not just about the money. It's about structuring it so that you're able to have so that you're able to deduct your interest and you're able to protect your liability and protect your assets with insurance. So many times people lose because they're underinsured. And we want to make sure that those things don't happen. So it's about doing things the right way. All of these things are connected to one another. And so it makes sense that you have an advisor or a team of advisors that you can talk to and help you navigate through these things so that you're able to push your company forward, so that you're able to move and grow and prosper. So again, please call in. Don't be shy. 213-292-7601. You're listening to the Wealth Code Unlocked on ATL Talks. I'm AC the Money Guy, and I'm looking for my co-host, Dr. Shanann Huie. She'll be back next week, but we're here every Thursday, 6 p.m. Eastern, 3 p.m. Pacific. So family, this is the play. So pull your credit with MyScoreIQ. Let's build a strategy so that you can position yourself so that you can qualify for the mortgage that you want, so that you don't give them a reason to decline you, so that you can qualify for the business financing that you want, so that you can grow your business and move forward. And after we build that strategy, let's get you funded. Don't worry about what you have going on. Don't worry about if it needs to be a bank statement deal, if it needs to be credit, if it needs to be, accounts receivable finance. Let's go ahead and get started, and we'll have the conversation with you and we'll direct you in the right ways. So we've been talking, the theme of today has really been about real estate more than anything else. Appreciate you guys joining in. Thank you for checking in. Appreciate the love. So this show's really been about real estate, because real estate, as everyone knows, I don't know any millionaires who don't have real estate in their portfolio. There's some who made their money and their fortune in real estate, but I don't know any that have no real estate in their portfolio. So I wanted to give people a quick hack. I hear a lot of people will talk to me and they'll tell me how they're interested in investing in real estate. And they'll share with me that they don't have much money. And they're not sure how can they get involved investing in real estate if they don't have a lot of cash. And one great way to do that is looking into tax lien certificates. So I'm going to share with everyone what a tax lien certificate is. Some of you may already know, but your local counties, they rely on property taxes in order to fund the schools and fire department and police department and just take care of all the things that we've come to expect as normal and that we would expect in any of the counties and cities that we live in. And so when a property owner does not pay those taxes, what ends up happening is the county's operating at a deficit and they have to make up those monies. So in order to do that, they will auction off the tax debt of delinquent property owners. So what that means is, say a property owner owes $1,000 for their property taxes on their house, and they haven't paid it, the county will auction that off. So you could pay $1,000, you might end up paying $2,000, $5,000, $10,000. It's an auction. So depending on what that property looks like, you do have some influence over how much people will pay for that particular property. And once that's auctioned off, the person who's that property owner or any of the interested parties, meaning if there's a bank or just the owners, they have what's called a redemption period. So the redemption period varies depending on what state you're in and how that goes. So typically, like in Georgia, most of the states, most of the counties here, it's 13 months. So they have a 12-month redemption period, and on that 13th month, you can foreclose. So let's talk about this for a second. So let me break this down why this is a really good play for multiple reasons. So, of course, what happens is the county guarantees you a rate of return, normally somewhere around 20%, in exchange for you paying someone else's tax debt and loaning that money to the county, so they can continue operations and take care of the citizens. That property owner has a redemption period. They have a time which to pay the money back that you paid for that tax debt, plus that 20% that the county guaranteed you. That's going to be paid by the property owner. And if they pay that, no matter if they pay that in one day or they pay that at the end of that 12 months, you're still going to get a 20% return. I don't know about you, but a 20% return backed by real estate and a county government sounds like a pretty good investment to me. So that's worst case scenario. They pay it back, you get 20% on your money. I don't know where else you can get 20%, again, backed by real estate, guaranteed, and also backed by the government. If they do not pay that back, the redemption period expires, the end of that 13th month passes. What's going to happen is you're going to be able to foreclose on that property, and you have purchased that property for whatever that tax debt was. Tax debt supersedes all other type of liens. That will be your property. You'll be able to foreclose on it. So then you'll be able to do whatever you want. If you want to live in it, you can go live in it. If you want to fix it up and sell it, you can fix it up and sell it. If you want to rent it, you get the idea. It's your house. So that is a great play because, again, 10 to 20% interest. And if unredeemed, you take ownership of the property. So, and this is another opportunity how you're able to protect yourself with writing off those repairs on the rehab on that property. So just you want to make sure that you're properly set up. I would suggest forming a business entity to do those things so you're able to write off those expenses a little bit easier. And you also want to just make sure that you have proper insurance, whether that's just on the property itself, even if you're not living in it, whatever's happening, because again, that's your asset. If something happens to it, you want to get paid so that you can go ahead and recoup and get back in the game. And so you want to make sure that you take care of those things. Otherwise, the deal can cost you more than it's worth, and there's nothing worse than that, than paying way more than something's actually worth. So you need to have a strategy, whether you're funding to buy, you're looking to fix and flip, you're tax planning, what you're going to do with your profit, and just how you're going to protect it and to keep that profit. So, those are very important, but I encourage all of you guys to look into that. If you're not familiar, at least look it up and understand what it is. Welcome. Yes. Appreciate you for joining. You want to, you just want to, you want to find out about it, because that's a great way that you can build up a little bit of money. So if you don't need the money, you can put it away for the next 12 months or so. That is a great way to go ahead and accumulate a little bit of wealth on some money that probably would maybe just be sitting in a savings account if you had not done that. So I would encourage everybody to do that. Take a look at it. Most counties do that auction on the second Tuesday It's the first or second Tuesday. It's been a while since I've been to one, but if you look it up, you'll be able to find that out. And you always want to make sure you do your research on the property. So you, before the sale happens, that list will come out. So when you get the list, drive the properties, take a look at the properties. That'll give you a lot of information, whether it's going to be likely to be redeemed or not. If you see a really nice house and there's a couple thousand owed in taxes, somebody's probably going to redeem that. So you're going to get your interest on that. Whereas if you see a property that's completely overgrown, nobody's there, nobody's lived there for a while, there's a great chance that you may end up having the opportunity to own that property. And so those are things to keep in mind when you're thinking about how high you're willing to go on that bid and what constitutes a good bid. So you're listening to the Wealth Code Unlocked. I'm AC the Money Guy. We're here on iHeartRadio on ATL Talks every Thursday, 6 p.m. Eastern, 3 p.m. Pacific. So make sure that you tune in. We'd love for you to join the discussion. You can join the discussion by calling 213-292-7601. 213-292-7601. You're listening to the Wealth Code Unlocked with AC the Money Guy. So let's talk a little bit. Let's talk a little bit about small businesses, and let's talk about business valuations. I know that's not a number that you really hear a lot. The only time you usually hear about a valuation is when someone is raising money, they're seeking an investor, they're getting divorced, they're having to liquidate the business. Those are generally the times. Oh, of course, if you're getting ready to sell the business, those are usually the only times that people will look at a valuation. And generally one of the main reasons is it's pretty expensive to do it generally in order to get a valuation done, because you're taking into account what the business owns, what the business owes, what's owed to the business, the strength of that business over the last 3 years, and just factoring all of those things in, just how dependent that business is on the owner, what the systems in the business look like, are they properly insured, so on and so forth. So most business owners don't do that. They don't take the time to do a business valuation, and I don't blame them, because until now it's been really, really expensive. I'm happy to announce that Carr Consulting is offering free business valuations. Again, free business valuation, so you're able to see what your business is worth and understand that. And that's very important, because I'm going to give you a stat that was really shocking to me when I heard this. 70% of businesses that are listed for sale never sell. 70% of businesses listed for sale never sell. Only 30% of these businesses that are listed for sale ever sell. And so you're probably asking yourself why. You're probably saying, oh, well, these must be businesses that aren't making any money. No, that's not it at all. These are profitable businesses. These are businesses that are making money. So you're wondering, well, how were they not able to sell the business? Well, probably the biggest reason why they were not able to sell that business is owners don't know what their business is worth. They know how long they've been in business. They know various other aspects of the business. They might even know what their revenue is. If they're really good, they know what their profit margin is. And they know some of those other key performance indicators, different things to lead to the strength of that business. But the reason why they don't know the true value of their business is because the only way to get the true value of the business is to do a valuation. The value of your business is not your revenue number. The value of your business is not simply the total sum of all the assets within your business, the trucks and the desk and the computers and the lights and the phones and all the rest of that stuff. And it's not simply what your profit is for 1 year. So there's a lot of things that can influence that. Again, depending on how structured your business is, how involved the owner is in the business, how easy it is for someone else to buy that business and allow those systems to run and allow that business to run without them having to get involved. So those are some of the things that prevent those businesses from selling. And I mean, again, 70% of them don't sell. That's a shocking number to me. And probably the second reason that they don't sell is they have poor bookkeeping and financial records. They're running the business, and they're running their business like their personal checking account. They're not keeping track of the finances. They're not documenting everything. So not only does it muddy up the waters to actually be able to see what's happening with the business, and get a true picture of what's coming in, what's going out, and where that money is going. It just creates a situation where you're never going to get top dollar for your business if you got poor bookkeeping systems. And then the last thing is you have a lack of systems, period. We all probably know some of these business owners, and you go into this business and everything works great as long as the owner's there. But if you ever happen to go in there and the owner's sick, God help us all. Nobody's going to get any service. Nothing's going to get done. Nothing's going to happen on time because the business owner is the system. And so the thing you have to remember is nobody wants to buy a job. They want to buy a company. So when you're building your business, you have to build your business with the exit in mind, thinking about someone who's not connected to you, who wasn't involved in the initial start of this, is going to maybe want to purchase this business one day, and they want to be able to run it or let it run itself with oversight and be able to make a profit. They don't want to have to live there. So that's why we're offering a free business valuation and system audit. I mean, the small business owners are the largest group of employers in the United States. And frankly, they're the backbone of the economy. So hats off, big salute to all of my entrepreneurs, all my business owners, all those people who are providing jobs for those in the community. You deserve it. You deserve to get what your business is worth. You deserve to build up a business that you can sell one day, and that all your hard work just doesn't go down the drain when you're getting ready to retire, you're getting ready to exit. So when we do this free business valuation for you, you'll see what your business is worth today, what the weaknesses are in your business, and how to build towards an exit ready company. So we'll be able to look at where you want to go in the future, what the time horizon looks like, what we'll need to do in order to get there. And so don't wait until you're 65 and you're ready to retire. Just build your company so it's exit ready now. So whether you want to sell in 3 years or 30 years, that valuation number is the key to retirement planning and wealth building, and also just protecting your family's future by making sure that you're covered, you have adequate insurance, that you're just protected. So definitely take advantage of that free business valuation. That's for all my business owners. That offer is available nationwide. So just make sure you reach out to us. You can reach out to Carr Consulting directly at 470-478-4045. That's 470-478-4045. And we'll be happy to help you with that and get you on the right track so that you can see what your business is worth. So again, you can reach us at 470-748-4045. 470-748-4045. So but yeah, just so yeah, that's critical, man. Don't waste time not knowing what your business is worth. Know that number so you can grow that number. So when you're ready to exit, when you're ready to sell, when you're ready to bring on an investor, you're easily able to do that, and you're able to show the value of your company, and you're able to sell for a number that's appropriate for all the work that you put in. So so thus far, we've talked about the mortgage disparities. So we want to make sure that we do our part by making sure our credit's intact and we know what our credit score looks like before we go to buy something. We talked about some businesses who got funding, and we had some success stories. We were able to get funding for some companies that went to their local banks. Their traditional banks declined them because they didn't have enough time in business. They just didn't like the deal, and we were able to easily get those deals done. So again, if you're being told no by your bank, that doesn't mean no everywhere, and it definitely doesn't mean no at Carr Consulting. So we talked about the real estate and the tax sale opportunities. So a great way for people to get into real estate investing. That's their tax lien certificates, buying that tax debt that's being auctioned off by the counties, getting that guaranteed interest rate backed up by real estate and also backed up by the county government. Worst case scenario, you get a double-digit interest rate return. Best case scenario, you get a house for probably a couple $1,000. And so far, also talking about the business valuation. So just being exit ready. So making sure you're ready to exit your business. So building the business that way from day one. Don't wait till the end. That's also another reason why businesses don't sell, because the owner waits until they're 6 months from when they're ready to retire to start looking at these things and figure out what's the value of the business. Too late, too little, too late. Too little, too late. But every financial move has got to be protected. So loans, you do loans, you take out a loans, you deduct the interest. You do real estate, you write off the depreciation, and you write off the write-offs, of course. And business ownership, insurance to cover your family if something happens. So this is the wealth code: credit, taxes, insurance, funding, community, all working together. And that's how you build and that's how you keep wealth. That's how you build and that's how you keep wealth. So I had a question. Someone was asking me earlier, and they were asking me, what should they do if they're declined for a mortgage? And the first thing is you want to make sure you take a look at your credit profile, make sure that everything is accurate on your credit. You want to understand those ratios and those guidelines. So it's called your debt to income ratio and your housing ratio are two of the most common. Typically, banks don't like to see your housing ratio above 32%. They don't like to see your debt to income ratio above 42 or so. Of course, that varies by lender and institution and programs. But you want to take a look at those things and make sure that you're prepared credit-wise. Make sure that you have adequate savings. So being prepared, having a conversation. Don't wait until you see a house that you want to buy to start talking to a mortgage professional or start talking to a realtor. Start having those conversations early so that you can get prepared. You can figure out if you're already mortgage ready, or if not, figure out what you need to do to get mortgage ready so you can put yourself in a great position to be able to purchase that home. One thing people don't think about is those closing costs and also the reserves. And then also when you buy a house, you want to have some money in the bank, because there's no more calling the maintenance guy. If something goes down, you're the maintenance guy. You got to fund that, and you got to take care of that, and you got to take care of all those things yourself there. So you definitely want to be aware of that and just make sure that you understand. So if you were denied for a mortgage, get with your lender. They'll provide you a copy of your credit report or give you access to request that. And make sure you look at the reasons why you were declined. Look at your credit report, make sure that all the information is accurate. And then you can regroup and go ahead and try again. That was a great question, though. So next question we had here was, how can I buy at the tax sale safely? So first thing I'll tell you is, if you're going to go and you're going to invest money at the tax sale, you're going to want to make sure that those are funds that you can tie up for the next 12 months and that you don't need, because there's really not an easy way to get out of that situation. So you want to make sure that you're investing monies that are investable. And you're also going to want to make sure you do your due diligence. Get a hold of that list, find out when the sale is, get a hold of the list, drive by the properties, look them up online, do your research, do your due diligence, go out there, take a look at them, pull the records on the property, and find out if it makes sense for you. And those are some of the best things to do, because if you bid on a property that's overgrown and nobody lives there and they may not want to live there, there's a good chance you're going to end up owning that property. So if you don't have a use for that, whether that's just to tear it down and make it to a lot, whether you're going to wholesale it, I don't know. You need to have a plan when you go into it. And that way you can make sure you can execute that plan and come out on the other side regardless of what happens. So you just want to do your research. That's the main thing, and that's the best strategy going into any investment. You want to make sure that you do that. So yes. So can my side hustle income help me qualify for funding? Good question. So side hustle income is generally not going to be something that you can list for funding because generally business funding is going to be based on that business alone. What kind of revenue is that business generating on a monthly basis? The strength of that company. So in that instance, no, obviously, but it would definitely help you to pay that debt, and to service the debt. So yeah, so that those are some of the things that you want to just keep in mind as you're going through that. And again, you're listening to the Wealth Code Unlocked. I'm AC the Money Guy, with my co-host Dr. Shanann Huie, the Tax Diva. We're bringing this information to you live every Thursday night, 6 p.m. Eastern, 3 p.m. Pacific. So let's see here. All right, so let's take a little bit, and let's play a round of rapid fire, fund, deduct, and automate. So the whole point of this is just to, if I own this business, how would I get funding? Where would I invest that funding? What would I deduct? And what would I automate? Because again, when you're building your business, you got to think about those things. You're constantly going to have to reinvest into your business. Those are things that are going to happen day in and day out. So if you needed to get funds, where would you get funding? So let's take a mobile car detailing service. So if you needed to get funding, he could obviously do business credit cards or business lines of credit, depending upon the strength of his credit profile. If he was doing B2B business, for example, if he had a contract with a company to clean their fleet, if he was going to clean a fleet of rental cars or HVAC vans or plumbing vans or anything like those, he could do a factoring agreement. He could factor his invoices so that he can receive money now if he was getting paid on terms. And where I would invest as a mobile car detailing services, I would invest in equipment and cutting edge technology. So I'd be finding out about the new products and services and new tools and equipment that I could use to deliver a superior service and take care of my customers. So let's see. And then deduct. Definitely, you're going to deduct all those supplies, the fuel, the depreciation on those equipment, sponsorships at car shows and things of that nature to bring awareness to your business. And what I would automate is my booking system, my text reminders, my automated supply ordering. I would build a calendar for my people so that we would just have a recurring standing appointment. That will be the goal, to keep those going and keep those in place. And yeah, that's how I would approach that particular business. So you see how the wealth code works anywhere. It doesn't just work for people who already are wealthy. It doesn't just work for people who own a business. It doesn't just work for parents. It works for everybody. And so we want to fund smart, deduct right, and automate systems so you don't trade time for dollars. That's that's really the ultimate goal in being an entrepreneur, is to grow a business that's self-sufficient, that you can run with minimal manpower and day-to-day intervention from you, that runs predictably and efficiently. So that way you get to enjoy what business owners got into business for. Everybody got into business in order to make some money, so they could be successful, so they could take care of their family, so that they can do those things that are important to their family, and so that they can take care of their family. So nobody wants to buy a job. And I'm sure if some of the folks who are listening are going to be honest, you might own a job right now. You're the boss in name only. You own a job. You don't have any free time. You can't go sit down. Everything hinges on you. Everybody expects you to solve all the problems. And that does come with the territory, but you got to build a system so that that's not everyday life for the rest of your life. So yeah, you want to make sure that you don't waste your time trading time for dollars. Real estate and business, those are things that are going to pay you while you sleep, where you make money while you sleep. The house is appreciating in value. You don't have to do anything. It's going to happen automatically. That business is growing and increasing in value. Yes, you have to work, you have to grow it, but the fact that you've established it is going to continue to grow and increase in value exponentially. So here's the blueprint we dropped tonight. Pull your credit with MyScoreIQ. Know where you stand. Know what's on your credit, know where you are. Get funded through revenue, receivables, or credit. So again, getting funded through revenues, we're looking at bank statement deals. They do still look at the business owner's credit, but they're heavily basing that lending opportunity based on the revenue that's coming through that account. And just a little FYI, some of the lenders, it becomes they have a minimum deposit requirement, and sometimes for those reasons, it can make certain industries a little bit harder to get done, because some industries you might have much more infrequent paydays, but they may be very high, for example. So the second way you can get funded through your receivables. So receivables is when another business owes you money. You did business, you did a work order, you did some type of work for a company. They owe you money, and they're paying you on terms. They pay you in 30 days. They pay you in 60 days. They pay you in 15 days. Or you have a contract over a certain period of time to provide a service for a company. Those are things that we can finance. Those are things that you can sell. Those are things that you can do to increase some cash in your pocket now. And the nice thing about that is, as long as you count the cost to do that transaction, you can factor that into your cost of doing business, so that you still end up making the same margin that you were going to make to begin with. So that's that's a big plus. And then also when you're doing accounts receivable finance, or you're doing factoring, those are things that you're not going to have to pay back, provided that those contracts are fulfilled. But those are things you're not going to have to pay back. So unlike other types of business funding, where you're going to have to pay that back and debt service that, those types you do not have to debt service, because someone is purchasing what another company owes to you. And then the last way, obviously, is just using the strength of the business owner's credit. So being a business owner is a powerful thing. You are able to get credit for your business as the owner. In order to do that, the banks are going to require you to guarantee that with a personal guarantee until your business establishes ample credit. But that's the way that you get to the other side of that. and be able to just let your business stand on its own. So, don't worry about, we're here to help you. Carr Consulting is the small business easy button. We're here to help entrepreneurs grow their businesses. It's our business to help you with the business that's not your business. So we help you move the stuff that does not directly relate to your core function as a business owner. We move that stuff out the way for you so that you're able to service your clients, you're able to take care of your customers, and we are able to cut through the noise for you. So then that way, we're able to come to you with a short list of options. You don't have to go to market and go price all these different things yourself. We're able to help you with that, and we're your small business easy button. So we're definitely here to help you with that. Explore tax sales. Explore tax sales. That's a great way to get 10 to 20% on your money backed by real estate. It doesn't take an incredibly large amount of money to get going. I bought properties at tax sales for a couple $100. Bought the tax liens. I've actually ended up with properties that I've owned where I paid a few $1,000s and I end up owning that property all from a tax lien sale. So I was cool with the 20%, but when I ended up owning the property, like that was all the better. So those are some of the ways that you can explore different ways to get into business. And I would encourage you just to have conversations. So reach out to people who that are in that space that you want to be in. If you have questions about a particular industry or something about investing, feel free to reach out. Drop us a line here at the show, comment on the video. We'll definitely make sure that we get that information back to you. And I guess the last thing that we had on there was just, to make sure you claim your free business valuation and system audit. So your number, what your business is worth, where you are in comparison to where you want to go, and build an exit-ready company from day one. If you build your company ready to exit from day one, you won't have to backpedal and do all these challenging steps at the wrong time because you would have built the business the right way to begin with. So and also that systems audit is going to make sure that the business is not too dependent upon you as the owner. It's great that you know how to do everything in the business. You're the owner. You absolutely should know how to do that, but it should be able to happen without you there as well. So just make sure you know your number and you're working on building an exit-ready company. You had the courage to bet on yourself. You took the time to develop the skills and the talent in order to build the business. Don't let that go away just by you not building your business to be exit-ready. So family, once again, 70% of businesses do not sell. Don't be in that number. That's ridiculous. Can you imagine that? You spend years of your life building a business that's profitable, that's generating money, and your family, your heirs, your bloodline, the people who are coming after you get no benefit from that because you weren't able to sell it and you didn't build the system good enough to where maybe someone in the family would have wanted to step in and run it and take care of that business. So don't let that be you, man. 70% of businesses do not sell. That's crazy. And I thought they were just talking about unprofitable businesses that weren't making money. No, these are good businesses making money because they didn't know the number. They couldn't price it properly. They didn't have the proper systems in place. The business was too dependent upon the owner. Poor bookkeeping, poor accounting, poor record keeping. And those are some of those things that keep the business from selling. So start today, know your number. Don't get stuck there. Next week, don't forget next week, this is the Wealth Code Unlocked. And don't forget to join us again next week, Thursday, 6 p.m. Eastern on ATL Talks on iHeartRadio. And let's unlock this wealth code together. And let's not forget that next week, we're going to be joined by Christopher Thomas, the CEO of NMM Group, the Reinvent Company, delivering marketing intelligence and breakthrough strategies to help businesses grow. You definitely don't want to miss it. I had an opportunity to chat with this brother. He's super smart, and he approaches marketing and reinvention and branding of your company in a totally unique way. And he just takes kind of some of those psychological things that we may be aware of or we may not be aware of, and he helps business owners to really to capitalize on that, and so to make sure that that their marketing and all the things that they're putting out are really putting the best foot forward. So I am definitely looking forward to interviewing and sitting down with Mr. Christopher Thomas, the CEO of NMM Group, and I'm really looking to hear what he has to say. He's been a staple in the community here, and he has a really great event, a great tour. Was able to take part in the Network and Chill here event he had here in Atlanta. It was amazing. It was a nice, intimate setting. You know, it was maybe 100, 200 people. But everybody came in there to make some connections and to talk to some people and find some people that could help them move their business forward. And so a great person to connect with. So make sure you connect with us at Carr_Consulting on Instagram, Carr Consulting on Facebook, and you can find us at Carr Consulting on LinkedIn. You definitely can see our YouTube channel, also Carr Consulting, and you can find all this great information so that you're able to listen to it at your leisure. Once again, I appreciate you taking time out today to sit down with AC the Money Guy and Dr. Shanann Huie, the Tax Diva. We're here to unlock this wealth code, one combination at a time. And until next week, be safe, be blessed, show love to each other, and it's all about community. Community makes the world go round.
Cool. Perfect. Look at you. Good job. Look at you. Good job. See, you can talk for a whole hour. Barry can talk for a whole hour. It don't seem like nothing, huh?
Oh, it's the speaker.
That's my phone. No, I was listening to your show. I do listen to shows. I try to listen to everybody's show, and I tell everybody to listen to it. So I do listen to shows. You know, if you say you don't even listen, I do listen.
That's good.
I do. I keep the phone going all the time. I got to listen to your show. You know, you did good. You can hear your show.
Yeah, man.
I mean.